Hello, everybody. Welcome back to another episode of Tech Bros. We are here and live. Unfortunately, dude said he was filling up his water. I don't know what that means. I don't know if he was here, if he wasn't here. Oh, there he goes. Finally,
Bro,
he's here.
He had to be late. He had to be late.
Dude.
I say, hey, can I go fill up my water? He goes, absolutely. Go ahead. I leave.
No. I don't want
live.
you to. I don't want you to be thirsty, but I also don't want the audience to wait. So I said you can go and fill up your water, but nonetheless, the audience, can't be waiting forever.
What an interesting start we had to our show. Very interesting.
And wait, did you call this Tech Bros Weekly, not PayPal Weekly? Okay, let me fix that. So there we go.
There we go. It's actually Tesla Weekly. We got some Tesla stuff to talk.
Oh yeah,
dude. How's the Model Y? You must be loving it.
I have driven it very little. It's my wife's, so she loves it. She loves it. We're not going to regret owning that car. Like I already know. Like we had, it's a perfect vehicle for us. The only regret is we probably could use a bigger garage, but those are first world problems. So amazing vehicle. The little bit that I've tried out full self driving, it's been really good. She's actually going on a trip in a week, so I'll have both Teslas, so I'm going to take hers probably multiple times to work just to check it out. But so one thing on that Model 3 2022, great vehicle. We got it used, 55,000 miles on it. Great deal on it. And it's an amazing car. It's the best car we'd ever owned. But getting into the Model Y, the refresh with the white seats, man, it feels like a luxury freaking vehicle. It really does. It makes me want to buy more Tesla stock because I know it's not just a car company, but I'm also not. And we'll talk about that.
It is always interesting, right? Like whenever you find a company with a product that is just so differentiated and that alone is the bull case. I mean, Tesla absolutely has that, but there's just a lot of political issues that also come with it.
Yeah.
So is there a company that you can find a differentiated product well above their users while also not being political? And this is a great transition to Shark Ninja.
I knew you were going to say it.
Actually, I was going to say, Tanner, can we start off with this? How was your 48-hour fast? Because you did post this video and you had all of us. A fun fact, I actually saw this video before you quote tweeted it because it went super viral. How many views did this get? 20 million views. Yeah, so I saw it.
Jeez.
But you did a 48-hour fast, bro. How was that?
Really tough. Roy here has actually done a much longer fast. So I didn't know. I was talking with Tevis and Roy the whole way through, and they were actually the guys to help me keep going because they kind of told me to stop. And I was like, absolutely no chance. If they want me to stop, that means I have to keep going. So I had a very hard time with it, and it was rough. It obviously doesn't feel good, especially the way that I did with absolutely no prep. But man, it's very rewarding whenever you finish. And actually, if I could talk on this really quick, I thought it was so cool posting this. Everyone in investing thinks or talks about the compounding rate in which they're focused on. Everyone says, oh, I made 30% this year, I made 40%, whatever. But no one talks about the amount of years that they're compounding for. So take care of your body as well. But honestly, Amit, I do appreciate you so much. You're one of the best friends that I could have possibly had in this content journey. And I will be posting more health content because obviously it is a big part of my life. And, how do you feel? Oh, I did feel like I was going to pass. I felt very tired. Like, it does feel tiring. You get up to go to the fridge or something, I guess fridge is not a great example, but you get up to go to like the bathroom and then you're like, oh, I should probably sit down. Like you just get tired from doing anything.
I've done 24 hours. I've never done 48, bro. That's like...
Roy's done 60.
60 one time. And it was miserable. Like people say it, and I think it just depends on your body type and probably preparation before and a lot of factors that there's a point where you hit and you have like all this clarity and you feel great. Like that never happens for me. Like at best I feel less miserable as I go along, but yeah. But
you're literally thinking about food the whole time. Like it's crazy.
That's long.
Whenever I do fast, even if it's not 24 hours, I will find myself getting into ASMR YouTube and watching someone eat food because it feels better, like just seeing them eat the food because I can't eat it, you know?
Oh man.
I do the complete opposite. I don't want to see any food content. I want to keep it as far away from me as possible. Now, I will actually, I think the next fast I do will be at the end of the year, and I'm going to shoot for 72 hours. But
well, there is a lot of like ancient literature on fasting and the benefit. This propaganda that we need 3 meals a day. It was sold to us from the food companies. Like, you do not need 3 meals. Now, I know everyone's body is different and all this stuff, but the benefits to fasting are just profound. It really is.
If done rightly, you can hurt yourself too. So make sure you know what you're doing. Speaking of fast, you guys see this? SoFi is moving up pretty fast.
Had a fun day.
3x.
All right, so we will talk about SoFi later as well, because for Tanner and Roy that have been following this story for the past couple of years now, big day for them. It was up like what, 8% today, 5% something?
For something. It's up 36% over the last month, over 200% over the last year.
Cracking 19, first time since 2021. So that was, a big thing.
Everyone thinks I've been following this thing since IPOE. It's not true. I've never seen this company in the 20s or 19 or anything. I started on the way down whenever it was 14.50. That was my first buy.
Yeah.
And then I've just only bought in lower averages. However, Amit, I took a page out of your book today. I just bought more shares.
You bought more shares? Wow. Buying into strength. I love it.
To be very honest, someone donated and I said, you know what? I'm going to put every dollar of that towards SoFi. So that's what I did.
Tanner, take 20 grand, buy 1,000 shares, and just like get this mother effer moving, bro. Let's get to 25, 30, like do it.
Dude, the Robinhood 100 shares at 100 was...
Okay, so let's talk about that. So let's reflect on Hoodie hitting 100, and then we'll get into all the topics, and we'll keep going from there. Last week, big deal. We did hit $100 a share. This was on Tuesday. We did the weekly on Monday, so we didn't get a chance to really talk about it. But I want to kick it off to you guys. What was your raw reaction of seeing triple digits on this stock?
That was shocking. I mean, we knew it was possible. I think we knew like it wasn't unlikely, but like actually seeing it, especially like you have to remember, like all of us were at the very least paying attention to the stock when it was in single digits. Tanner got in like at 13 or whatever. Like it's such an incredible return, and it doesn't feel like ridiculous. Like some people might say it's expensive. Fine, you can have that argument if you want, but man, it feels great. And one little thing with that too. So I did really well during like the COVID stuff with just like trading things back and forth, and of course was in a bunch of junk because junk was floating to the top. Palantir was like my first huge compounding because of a sheer performance of a company, not just stock market doing stock market things. But sometimes you when you look at it and you just have like a one-off type thing, you're like, is this actually repeatable? Like, am I just lucky? Then Robinhood. And there's been others since then too.
Did we get lucky twice, Roy? Did we get lucky? I don't know. Did we get lucky?
Robinhood, yes, absolutely. And HIMS could be there. HIMS has been very good for me. SoFi, it's starting to like it just once you get your second like 10x, like that's what it is from the first positions I was buying in Robinhood. Well, it was all option, but just go with me. I was buying under 10. It's like, okay, I don't think it's all luck. There is an element of like timing and just seeing the opportunities and stuff. Like it's not all just like I'm so good, I'm not doing that. But
yeah,
it felt so good seeing that because I'm like, okay, I've had two 10xers, two 10 baggers in the last few years. It's like it's incredible without options. Like just man,
honestly, I give a lot of credit sometimes to this community. Like I would not have found Robinhood if it wasn't for you guys. It's funny. Like there was that whole thing about Weeble and everything going online. And everyone goes, "Oh, why were we all in a group?" It's like, well, because these are the best investors that we know. Like, so if you want a second opinion from anyone, why would you not go to all the people that you're watching on a daily basis anyway? So like, why are we watching them? Well, they're the best investors that we know. Like, I follow Chris, Roy, Amit, and I don't just do this whenever I'm on a show with them. Amit knows this more than anyone. I'm in his chat all the time. Like,
No.
so I don't know. It's always good to get second opinions, and that's essentially why I think I even got a part of Robinhood in the first place, or some of these other names, is just because, you know, I listened and I wouldn't have found some of these opportunities, and I've passed on some of the other ones that I don't agree with, but that's also fine too. Like, but putting it on my radar is really what I'm thankful for.
I think the beauty of this is it really was a community effort. I mean, there's just massive amounts of due diligence that have not been found by you, me, or Roy. It's from random people across the world who maybe got introduced to Robinhood because we made some videos, some tweets, some articles about it. And then they got into the story, just like we were into the story, and they started digging up as much as they could find. And that reinforced our conviction that there's a real community that sees what we see. The DD was really good, so it helped us potentially buy more, keep our position, etc. And it was a community effort. And I think it is something to be cherished because this game is so freaking hard. We saw what happened with Weeble over the weekend, right? Like, you think you have a thesis, and then just something like, it is so hard to find a generational company that you think is generational, but can they actually prove to be generational? Can the street recognize it? A founder that's not full of shit, which Vlad was perceived as being full of shit for a very long time, and he did a full 180 on that. And then the growth, like the actual, like if it's a meme stock, it doesn't need the growth because it's just going to get hyped up to get hyped up. But Robinhood has been putting up the growth, and now they're getting a hell of a multiple at like almost 30 times sales because of that growth. And quite frankly, there is a lot of luck involved. And I don't think it's only luck, but I don't know if we get to find, forget another 10 bagger, but even a 5 bagger, right? Because most people got into Robinhood at 20, so 20 to 100. Like, do we find that as easily? Like, are the macro conditions going to be available over the next couple of years to find that stock? And if you do, then you're a hell of a stock picker, but it's really freaking hard. And so I think we got to cherish it because it was incredible to see it happen.
Yeah, and like as far as 5-bagger, like we'll find those, just because like if you give yourself a 10-year time frame and you're investing on what you perceive as quality companies, some you'll miss. But I mean, if you look back 10 years ago just to see how many 5-baggers there were, there's quite a few. Now, part of that is, just the power of being invested in U.S. stocks and companies that are just absolutely killing it in a bull market. But yeah, we'll have more 5-baggers for sure. But a 5-bagger in like a year or two, maybe not. Like, we might have to wait another 3 or 4 years until, because never know what the market's going to do. So, man, it just feels nice though, just to see. And I absolutely agree with you guys. Like, there's so many stocks and tickers, and you only have so much time. And so having a circle of people that you can bounce ideas off of just helps so much, because sometimes I'll pitch something and these guys will shoot it down, and sometimes I think, oh, they're wrong, and sometimes I'll be like, those are points I hadn't considered yet. And Robinhood was one of those where I just was like, no, this is a Kathy Wood thing that she's all over, and the IPO was way up there, and I would never invest in that. Why would I invest in a brokerage? And Arnie, he basically shared with me, and he was sharing his due diligence way back in like April maybe or May 2023. And I took a look for the first time, an actual look. And I was like, okay, yeah, this is compelling. And I didn't know how compelling it was at the time. So yeah, it's been quite a ride.
Yeah, and look, I mean, I've heard this comment a lot as well. This combo is giving PQ for you. I think there's 2 responses to this. Number one, I think we're just celebrating as a community. We started this podcast because of Robinhood, so it's okay to celebrate a little bit the fact that we all got to this point. Number two, none of us, definitely not the 3 people on this stage, are oblivious to the fact that Robinhood is a cyclical business, and if we have a nasty bear market or even not that bullish of a market, then Hood's revenues are going to flatline. We are hoping and trusting that this company can diversify enough of their product offerings to be ready for a 2022 scenario and not fall 80%. We might be wrong, and right now might be the best time to sell. But, I think they've given us enough belief that they're going to be able to figure this out, but the risks are still there. And so I'm curious in the chat if anyone sold covered calls or bought puts or on it, like very curious to see what you guys did. But I think all 3 of us, we didn't do anything. I don't think any of us took any profits.
No, I haven't taken any profits. But what I do find interesting is, it might be PQ4 signs of a top or whatever people say, right? But like, there's been a lot of research, especially coming out lately, because we are hitting all-time highs, that this actually can happen in sort of clusters of all-time highs, as well as July being, some of the strongest months that markets have ever seen. If the market is strong, Robinhood is strong. Like, I don't know if that necessarily means that this is the conversation of the day per se, but I think what everyone's really celebrating is that we're betting on a company. We have shares of ownership. These are not something that expire into the future, of a company that like banking is not released yet. You know, like they have not gone into Singapore. That's a big topic that we need to talk about this week. Like they have so much more room to grow, so much TAM, like zero competition or worry about someone sort of biting at their ankles right now. So the premium's high. Will it get any higher? I don't know. But the continued execution and in growth in financials is really what I'm celebrating. Yeah. I'm just happy that the market also sees it. It reflects in my portfolio. That's exciting. But overall, the fundamentals is not something that I think is peak euphoria. I think that's just going to continue to grow.
And it's one thing for a company to have a motto, like, you know, or a vision. All of them do, but a lot of them don't mean it. It's just like, you know, just kind of there. Democratized finance, like I didn't, you know, I thought, well, yeah, it's just, you know, mostly for optics. There is some that they're doing, not all of finance, surely. Now I'm like, yeah, they're doing it. And yet another example from this last week was the Robinhood chain, which, you know, we'll have to see what that actually looks like. But any other company where they're like, hey, we're moving like our entire company on chain and we're opening it up to developers and doing all these crazy stuff, I'd be like, yeah, sure you are. I mean, like it's a nice idea and project, but it's going to be hard to carry out and it'll take, you know, like years and years and it'll never be fully executed. Yeah, this is Robinhood though. So they're not just, you know, speaking out of their mouth to pump the stock. It's not just hyperbole. It's they mean it. And you know, it's audacious, wildly so what they're doing, to the extent that regulators are still trying to figure out what and how they're doing it. But nevertheless, like I'm not buying more Robinhood here, but I'm happy to hold.
I am.
Shares. You are. I don't think there's anything wrong with it.
Yes.
I don't think it's crazy. It's not cheap, and it's very volatile. Like it's $40 not that long ago. But if we get a correction at some point, I'll buy more Robinhood gladly. Yeah, baby.
Crazy.
I just look. It's so funny to me because I made the mistake on Palantir. I was one of the most bullish people in the community, and it kept going up, and I didn't keep buying because I was too afraid of, quite frankly, things that don't matter as much, like valuation, which matter, but there's a reason why I don't think it matters in the context of Palantir as much, and I'll talk about it in a second. With Robinhood, I did not make that mistake. I was like, if this is a company that I believe in, even though I can see it's way more cyclical than a Palantir, the street's going to give it a premium. And the reason for that, and the reason valuation maybe isn't the biggest concern here, obviously, if we have a bear market, valuation is the only thing that matters. But Mark Andreessen, famous venture capitalist at Andreessen Horowitz, he posted something a couple weeks ago that I think all of us talked about. It was this phenomenal statistic that 90% of the value in the stock market in the past 50 years has been created by 2% of the companies that are public. And the takeaway from that is when you have a winner, even if you have to average up, it's going to be really hard to find another winner, especially if that winner just at a 10x, right? Because unless it's a full bubble, like if you think Palantir Robinhood's a full bubble, then they're coming all the way back down to the 20s. If that's not the case, there will be pullbacks, but you just get more exposure to that winner because that winner will be responsible for the majority of the stock market gains 10 years from now in its own sector. And it's just hard to find those.
One of the best things, or one of the neat things about Robinhood is it's cyclical. It still is. They're less cyclical as time goes on. But when there is a crypto winter, not if, when there is a bear market, not if, those are going to be amazing times to add if you want to. Like as long as this company continues to execute at a high level, like that's where it's like, oh man, yes. I won't be. The great thing is at that point, I won't be like crying and being like, oh man, my stock portfolio is down so much. This is terrible. It's like, oh man, Robinhood is trading at that again. Yes.
I'm excited.
And the funny thing is, like, if this bull market continues and crypto winter stays away for another year or two, I don't think that it will, but it could. You know, $100 might be that price where it corrects too. So you never know.
So just to add on to your is crypto or when crypto goes into a winter, I know this is going to sound a little crazy. Are we in a crypto winter?
No.
Because
what would you define it? But what price would you define Bitcoin being at a crypto winter?
I wouldn't define it as a price. I'd define it as volume. And from like I think activity is going to be the new thing that people determine whether there's winter or not, which is also what I worry about more and more for Bitcoin and the likes of that, is that, like, you know, Tom Lee's whole case is that, like, hey, if only a point percentage of people are trading Bitcoin and everyone else is hodling, that's actually not good for the brokerages, right? If everyone's just not moving it and the volume stays low. So obviously Bitcoin's at an unbelievable price right now, but the volume that we've seen in the last month or so and what we've continued to see is 1/3 of what we've seen the months prior. So
Yeah,
it's
not good for
definitely
hood or
not
market.
a spiking bull market right now.
Roy, you think
Yeah,
it's a
so
crypto winner?
no, it's not. Crypto winter is when you're going to hear people basically say that Bitcoin is a scam and all the crypto is a scam and everything. It's not like crypto bull markets doesn't mean that Bitcoin just goes up in a straight line and all the alts run and everything. It's a little bit different for a lot of reasons. Institutions, we have regulators that have opened up the floodgates, so to speak. But also, as far as alts, usually there's a bigger alt run, but a lot of the alt chains, there's not really much of a purpose for them. For some there are, but a whole lot of them there's never been anyway. But there's even fewer, I think, now, just because stablecoin replaces the utility of a lot of them, and frankly, it's just a better vehicle. Although there still is a need for level 2 chains, just because stablecoin would not work otherwise.
So someone said institutional volume though, but okay. So what about a sort of a retail winter?
Okay, but before we get into the OpenAI controversy, because that's a big topic on Hood, what if there is never going to be a crypto winter again? And what I mean by that is the Saudis, the Chinese, the BlackRocks, the US government, potentially the sailors of the world, everyone is backing this asset up. It's not like it was every other cycle where there wasn't this type of institutionalization. Could there be a world where maybe the volumes are intense, but the asset doesn't fall 70% again?
But that's what I'm saying. That I think is that's what we might be seeing, is that the asset prices are not falling, but the retail interest is. Like, clearly there's not as much trading. There's less and less. I mean, by a large percentage, and yet the price is staying really high. But maybe that's just sovereign money.
That's a winter for the brokerages, which sucks, but I don't think that's a full-on winter.
Yeah. So sorry, I'm highlighting more about what it means for Robinhood.
Yeah, I mean, like, I just don't think by any definition. I think this is just a lull, and it's not that uncommon. If I can recall correctly, correct me if I'm wrong. In a normal crypto cycle, to have periods of lulls, what you usually have before winter too is you'll have a blow off the top rally. We haven't seen that. I think that might be coming. When that happens, I'll be like, "Yep, crypto winter is right around the corner." But to your point, this is kind of like a stock that goes from heavy retail to more and more institutional involvement.
Yeah.
That kind of stabilizes it. It can still be volatile, but not nearly as much as it was before. And a lot of people perceive Bitcoin as digital gold, and you just don't. Why would you trade gold unless you need it? There are people that speculate on it. That's fine. But a lot of them, like myself, I have a Bitcoin position. It's my only thing right now that I'm DCAing into on a weekly basis. And I'm not like, people are like, what's your price target? Where are you going to get out of it? I'm like, why would I get out of it?
Oh wait, hold on. Can I ask you guys a question then? Okay, so Tanner,
I saw what Amit said. Go ahead.
Okay, so Roy, you know that Robinhood's given away 5 Bitcoin on July 21st. Every dollar you've put in over the past like 3 weeks is one entry. 5 people will win. This to the chat as well. If you are the winner of a full Bitcoin from Robinhood, you got to pick an answer. Don't bullshit me. Are you selling it and taking the $108,000, or are you holding it forever?
Oh man. The hard thing is, I haven't shared my like portfolio size to the exact penny, but it's less than $1 million. So at that point, Bitcoin becomes a very large part of my portfolio. I'd probably sell half.
No. That's not what I said.
One or the other.
Yeah, you're either selling it or you're holding it.
I'd keep it. I think that long term, like as long as I don't need the money, there's no reason to sell it. Honestly,
dude, I'd sell that.
I'm definitely hodl as well.
I'm taking you guys are ridiculous. I'm taking the 100,000 and I'm putting it into Nvidia.
No, like literally, I gave one of my sons financial advice. They're the only people I actually give financial advice to, but they're my kids. The older one, he's got some money saved up, and I'm like, you should be buying stocks. What are you buying? And he's like, no, right now I'm just raising cash. I'm like, dude, you got a ton of cash. Put it to work for you. And he's like, yeah, stock this and that. And he's got SoFi, so he's happy with that. But I'm like, well, buy Bitcoin. Just buy $1,000 of Bitcoin, man. Come on, do it now. And he's like, nah. I'm like, I don't know. It's hard to see with regulators. Like, I think the U.S. House declared either this week or next week as crypto week, which is just like the craziest, weirdest thing. SEC is completely changing and pivoting. Regulators, even in Europe, like, are more open to crypto. And like the United States actually has a vested interest to pave stable crypto regulation just because of the impact of stable coins on treasury and also the dominance of the US dollar. It's a crazy time to be alive because we've seen such a pivot from just persistent headwinds. So it could be that this is a much longer bull cycle than I expect. But man, I don't know where it's going in the next year, but over the next 10 years, it's going to be worth more.
Tanner, you're holding it, I imagine.
Yeah, I think even less than the money. What I find really interesting is that, like, I don't know if you guys saw the buzz around the 0.1 Bitcoin this past weekend or whatever, but essentially if you own 0.1 of a Bitcoin, CZ believes that, you know, that'll be enough to buy you a house later on in life and stuff like this. And it places you in like the top 2% of all Bitcoin holders.
So
Having just
$10,000 worth of Bitcoin, that's what his argument is.
Yeah, essentially that will be house purchasing money in the future. I think having one Bitcoin flat, good place to stay. Wouldn't care about the asset value, not nearly right now. I don't know. If it's not going to be life-changing money, why even look at it at all?
Yeah, that's the easiest thing for me. Like, I regard crypto in the same way as I do precious metals. We have a lot less precious metals now and more crypto, but I just don't think about it in terms of my assets ever. It's there. It gives me some diversification, which is helpful, and you just let it do its thing.
And bro, the CAGR on Bitcoin has done phenomenally. Even if you drop that down to 20%, I mean, like, it's hard to beat the market and complain. Like, I don't know.
You're not wrong. All right, so let's keep the conversation on crypto going. We had some controversy the day that Robinhood got to 100, and Twitter jumped on it because they still want to see Vlad's downfall. They want to see this guy completely fail.
They don't want us winning.
They're going to have to try a little harder.
They hate us because they ain't us.
They hate us because they ain't us here. But OpenAI and Sam Altman's big mouth comes out and says, these OpenAI tokens, the one that Robinhood put out for their EU customers, are not OpenAI equity. We did not partner with Robinhood. We are not involved in this. We do not endorse it. Any transfer of OpenAI equity requires our approval. We do not approve any transfer. Please be careful. Vlad comes out and says, at a recent crypto event, we announced a limited stock token giveaway on OpenAI and SpaceX to eligible European customers. While it is true they aren't technically equity, the tokens effectively give retail investors exposure to these private assets. Our giveaway plants a seed for something much bigger. And since our announcement, we've been hearing from many private companies that are eager to join us in the tokenization revolution. Now, Robinhood also came out with a tweet from their communications account that said the OpenAI equity or the OpenAI tokens are backed 1-to-1 with OpenAI equity that Robinhood does own. They probably got someone to sell them, I don't know, a couple $1 million of OpenAI equity so that they could give it away. So just like when you buy a token on the European platform of Amazon, that's Robinhood is sending that order to a market maker and backing it up 1-to-1 with an Amazon share. Same thing is happening here, except you can't literally buy OpenAI on the public markets, but Robinhood has their own reserve of OpenAI stock privately held that they're backing 1-to-1. A lot of ideas, lots of thoughts, lots of controversy, lots of perspective and opinions. Let's start with you, Tanner. What is your take on this? And do you think Robinhood is in the right, in the wrong? And how do you think this is going to affect the perception of the company going forward?
So I don't know too much about the EU and what they care about for, you know, specific specialized purpose vehicles for buying private shares off of one company and selling them over, because they're not doing it in America. They're doing it in the EU. So I don't know all the intricacies, but the whole review and everything that we saw from did you also bring that up as well? The I think it was Lithuania that's looking into this and talking with
Lithuania reached out today, and they just want to know. So they're not accusing them of anything. They just want to know more about how
exactly. And everyone online is making it seem like they just got hit with a fine All they asked for was, hey, how is this getting done? You know, it was absolutely nothing. So, assuming that it is real equity and that people are purchasing not just a token that is trailing what they believe the valuation of the stock to be, which is not what it is, but actually holding real shares in a private company, I still think that there's things that I don't like about it, but I don't think that it's illegal. Okay. Like, for example, the part that I don't like, which Amit has brought up many times already, is that like this is actually not open for purchase right now. They gave away this, and that if they are going to do it, they're going to do it similarly to how SoFi does IPO access. They can only sell what they own, right?
Yeah.
So they're going to have to, like, this is not an open market where there's just an endless flow of volume. It's probably they're going to go out, try to acquire $10 million worth of some private company and then sell it to their investors. They're going to make scraps on that, but it's going to make happy users. I don't think that that's a problem. And I think that we need a Robinhood in this world to push boundaries, try things new, or else we're not going to move forward in general. And especially in a place like finance, I think everyone's very afraid to do it, and Robinhood is well positioned to continue to push the boundaries.
So this you missed. Elon Musk did not comment on what he thought about SpaceX being there, but he did right here give a dig to Sam. So
This was great.
Your
This was
equity is fake.
This was so good to see, because they also tokenized SpaceX. Elon doesn't give a shit about that because Elon's worried about other stuff in life. Apparently, OpenAI cares so much about this, and Elon's like, "Wait a second, you guys were never supposed to be a company in the first place." So,
I actually don't think, like you said, that they actually do care. I think that OpenAI is just like, hey, we should let you know that we're not partnering with them.
It may have been like a legal thing, or possibly like they've been having a rough week because Zuck has been stealing their employees left and right. And I mean, that just can't be a fun place to be in when your top talent for the second time in a couple of years departs. That's rough. So I'm kind of curious, you know, when I saw that, I'm like, I wonder if they weren't having all that happen, if they would have handled this a little bit differently. But
yeah,
it is so funny, by the way, how all that went down. They go, oh, you know, how much, or like, I guess people don't care about culture as much as you thought that they did, right? And all this stuff. And then they came out and said that Meta was doing this with shady practices, like just a few hours to accept the deal or not, or else it's off the table. Did you guys hear that?
yes.
Like, I think, dude, this is a free market. Meta can do what they want. The individuals can choose whether they want to do that for them and their families. And if they don't take the deal in those couple of hours, they still work at OpenAI. Like, they'll be fine, you know? So,
Okay, well, let's hold that first because I want to get deeper into that conversation. Let's finish this one and then we'll transition right into Meta. My take here is very simple. OpenAI doesn't get a say in this. And neither does Google, neither does Amazon, neither do the hundreds of stocks that got tokenized in the EU. At the end of the day, this is the point of crypto.
But is that true though? Is that true?
Well,
because if they have to approve every transaction, if Robinhood is selling it on their behalf, is that breaking some sort of private share agreement?
Well, maybe in the United States, but not in Europe. And my point is, like, Robinhood did not go to Google, Amazon, Tesla, Palantir and say, hey, can we tokenize your company? That's not how crypto works. It's all decentralized. It's permissionless. All those companies care about is that you're not making a fake Palantir coin and someone thinks they own Palantir when they don't. The whole promise of tokenization with the instant settlement and the blockchain technology that is actually going to be finally used for something other than speculating on if an asset goes up or down is, hey, you can use blockchains to buy a share of Palantir. We will do all the grunt work using crypto to buy an actual share. We will give you exposure to the asset in the form of a token, which you don't care about the shares, right? Like you just care about having Palantir at 130 go to 150, making the difference in the middle. You don't care what it is. You just care that you understand it is associated with Palantir and it correlates one-to-one with Palantir, and Robinhood handles the rest. The same thing is going to happen with Anduril, SpaceX, OpenAI, all these private companies. Like, eventually, if you have exposure to the asset class and someone is backing up the asset with their own equity, which is the most important part, that's what we were a little worried about. Did Robinhood actually own the OpenAI stock or not? But they do. Sam Altman can't do anything about this. Just like YouTube couldn't do anything about OpenAI stealing all their videos to train their models, Just like all these thousands of blogs on the internet could not do anything about GPT 3.5 stealing all their content for 2 years to advance AI. That's exactly what Robinhood's doing with crypto, but in this case, it's not as scummy because you're not actually stealing stuff from people. You're just tokenizing the asset and providing more liquidity to these companies.
Yeah,
so I think this is happening no matter what.
I mean, it probably is. We'll see how regulation goes, and this may end up being a legal battle at some point in the future. But push back on that a little bit. Like one of those challenges, there's several with the private equity, is that if there is a finite amount of token that's offered there, just because they have to back it on a 1-for-1 basis, and I'm sure that Robinhood will and does, they wouldn't be doing this otherwise. That token can be divorced from what the actual valuation of the company is, and greatly so. And that can cause
Wait,
a host of other issues.
How is that?
Well, so if it's so private equity, we have tracking mechanisms to see the valuation, but really that comes during those seed funding rounds. That tells us what the valuation is. It's kind of like earnings for private equity, but it's not going to trade back and forth every day like a token. And so you and I might be like really excited about whatever SpaceX is doing and like buying this thing up, and it's trading at like $400 a token. And then, but the reality is when that next seed funding round comes or whatever happens, they're like, no, it's actually valued at half of that, and it just crashed.
But then that's like a stock having a bad earnings. Then your token would just drop in half, and you got screwed because you bought a stock way too high. Right?
It's still weird. Like if it goes public, I mean, I don't know. It just there's a lot of things that I have not begun to think about on this. So, and that's probably like the pause of the regulators in the EU, where they're like, wait a minute, okay, how is this happening, and is it legal? And so they want to take some time looking in that. Regulators, especially in the EU, will regulate. But yeah, it'll be interesting to see how that plays out. But I agree with you. I think that they're at the very least, and I actually prefer the model of private companies reaching out to Robinhood and saying, hey, do us next. That's great. I think that that's very healthy. I don't like as much when they're like, but there is a danger. And I know you're going to say this, Tanner. There's a lot less disclosed when it comes to private equity. And so there's a danger that there's going to be some very sketchy companies there.
Guys, that's not a concern. Vlad talked about this already. They will put a big warning symbol on companies that are like raising a couple million and they're just going to the public markets. And they will put a check mark against Anduril, which is, you don't have to say, hey, this company could go bankrupt, because it's probably not. Like, that's not it. That's just like, that's like penny stocks having a little bit of a, hey, this could be volatile. That's just a simple UI fix.
Well, they could get Anduril to pay like $8 a month so that they have that blue check mark right by them. And wait, no, that
would actually be a funny business. But that's not a concern to me. Private companies that want to raise seed funding, even if there's startups that are never going to be as big as SpaceX, if they find capital via Robinhood after the Robinhood users say
from non-accredited investors.
Sure, and the accreditation laws have to change in the United States for that. But if you have a big disclaimer saying, hey, this startup will probably fail, like most startups do, and someone still chooses to invest just like a penny stock, I mean, to each their own at that point, right?
Yeah, I mean, there's definitely worse ways to blow your money, right? You can go and put it all on black or red or something and then lose your money that way. Like there's other gambling things. As long as people are fully aware that this is not the same as what people traditionally think of as
there are no disclaimers for buying Trump coin right now. I mean, come on, bro. Like, I think this is Vlad's point. He's like, why? Like, we can buy all this bullshit. Like, how can we not get private companies that are trying to raise that could potentially go up 5,000x? They could also fail, but like, it's the same risk reward as buying a Trump coin or some other random meme coin.
Sure. Yeah. No, I do think that if some people said, why would private companies not want to do this to raise capital? They don't raise capital by doing this unless they're going to Robinhood for like a series round or someone a part of that round. But if they're just doing it on their own, buying it from employees or something, shares sold in secondary markets do not affect the actual companies themselves. So they wouldn't really want that to be said. And then if you're also trading in secondary markets as well, potentially that could affect sentiment of employees and everything if the secondary market is putting a different price on the stock than what investors might think it is. Like, for example, Chime had a Series F, something like this, like a very late round of their funding that was $25 billion valuation. And then they went public at an $11.2 billion round. No one wants a down round, but that's what happened. But between those two times, what did employees and everyone that had stock options think? Like, I don't know. I think that it affects companies. So would they have wanted a secondary token that tracked the price? I'm sure Chime would have said no, until they went public.
Right.
So I don't know. There's a whole lot of weird nuance. I don't worry about going public. I don't worry about any of that. I think that the private shares would be treated the same way private shares are now whenever a company goes public. New shares are added and they're sold to the public, and then your shares are available to a larger, wider audience. But
okay, so that transitions us into what's going on with Meta and OpenAI. So I think OpenAI is probably also upset because everyone's leaving. So this came out a couple hours ago. Apple's top AI executive, Roy made the point that he didn't know there was a top AI executive, but there is at Apple, is leaving for Meta's new super intelligence group. And then Alexander Wang left Scale AI to join Meta, and he posted this picture. There's like 10 people or 8 out of these 10 people left OpenAI to join Meta. And that's kind of crazy because OpenAI is perceived as this company that's going to take over the world. They're going to achieve AGI, etc. They like going up against the big corporations, and they're the small little startup taking over the world. And it looks like, based on what Sam Altman has said, these people were offered literally $100 million deals for one person to leave, and they're leaving, which begs the question around, is the culture of OpenAI, forget the compensation, worth staying? So, Roy, what's your take on this? And does this mean that Meta is now the actual AI stock we should all care about?
Well, I love that there's this direct from Apple to Meta, because I've been making this comparison for a little while where, to give some context, Apple Intelligence launched at the previous WDCC. Well, it was announced. It was not all it was cracked up to be. It was mostly just a good show and a good story, and that was it. And their AI strategy largely has been maybe find some partnerships and then write white papers about why AI is bad. Like literally, they published multiple, and it's like, come on, guys. They're just hoping this whole AI thing goes away. And so they're doing nothing about their failed project. Meta, they've had some AI ventures. And so Llama, which is an open source LLM, it was doing very good for a while. They released, I think it's Llama 4, and it was a failure. It was not nearly as good as it should have been. There's a lot of issues with it. It didn't pop like they expected. And so instead of Zuckerberg doing a Tim Cook and saying, you know what, we're going to bow out of this AI thing, or we're just going to stand pat with what we got and hope for the best, he realizes that there's a problem, because he's a really good CEO. I don't like the guy too much, but he's a great CEO. And so he's willing to, because they have just a ridiculous amount of money, and Apple does too, go out and get that talent. Tim Cook could have done the same thing. He could have said, you know what we have is not working. It's not good enough. And it's vital that we innovate. But instead he's like, we're fine. And so Zuck does the opposite here. Short term, it's probably bearish, honestly, just because if you're throwing out massive deals like this, these sound like sports contracts for elite athletes. There's a cost to that. There's a big cost to that. Now, if they pull it off, and the talent pool, I don't recognize a lot of names here. I do recognize some, but it seems like it's pretty deep looking at these guys. So it will probably take them some time to gel, just as it would for anybody. If you take the All-Stars and you have the United States compete internationally for basketball, it takes a little while for these different players that are on different teams to really gel and mesh and really figure out what they're doing. But the great thing about Meta is they have Zuckerberg, who's not just going to say, okay, guys, just create AI stuff and make it like good for us. He has a very specific plan and target of what he wants to be executed. And it's so much easier to integrate into that system where he knows what he needs. He knows the talent that he needs to acquire. And as he acquires people, he plugs them in place. So long-term, this is very bullish for Meta. Again, I'm not going to invest. I'm on the sidelines here, although it is in my draft portfolio. But yeah.
Tanner, before you give your take, let me just play this quick clip of Sam Altman talking about this.
Google, in the early days of Facebook, it was rational for them to try social, even though it was like clear to people at Facebook that was not going to work. And I feel a little bit similar here, but they started making these like giant offers to, a lot of people on our team, like $100 million signing bonuses, more than that comp per year.
It's crazy.
And it is crazy. I'm really happy that at least so far, none of our best people have decided to take them up on.
This was 3 weeks ago. A lot of their best people are leaving.
Yeah.
I think that people sort of look at the two paths and say, all right, OpenAI's got a really good shot, a much better shot at actually delivering on super intelligence and also may eventually be the more valuable company. But I think the strategy of a ton of upfront guaranteed comp, and that being the reason you tell someone to join, like really the degree to which they're focusing on that and not the work and not the mission. There's many things I respect about Meta as a company, but I don't think they're a company that's like great at innovation. And I think the special thing about OpenAI is we've managed to build a culture that is really repeatable innovation. And I think we understand a lot of things that they don't about what it takes to succeed at that.
But that culture is leading to people saying, I'm out. I'm taking a couple $100 million from Zuck. So Tanner, what is your take on this?
Yeah, I think it's important to highlight that this is not just $100 million. This is like anywhere between $300 and $400 million for a multi-year term. Like these are bigger than sports contracts. These are the size, if not more, of the acquisitions that Robinhood is trying to make for full businesses that operate, for individuals. The top executives at Meta make like $20 million a year, and you have these research, just absolute nerds coming in getting paid $400 million, right? It's insane. So I think it needs to be highlighted that just because someone came in and gave an offer to an engineer and said, hey, can you come over here? Everyone's flooding the chat with, oh my God, they won. Apple can come back and say, hey, you know, we got $200 million signing bonuses. Why would they not? Well, because it costs a crap ton of money. So the pour out of capital here is something that people still need to make sure that it is returned in droves. Obviously, with the super intelligence comments that Meta has been making, these unbelievable signs, he is wired on this idea that the world's about to change big, and he'll pay any price to make sure that he's the number one player. It is actually quite exceptional, not for what Meta is going to be on the other side of this, but what the industry, the world is going to be like on the other side of this, if his bet will come true. So I think just the sheer size is something that's quite incredible. But like Roy put it, I think it will actually be bearish in the short term. And you know, there will be other players with their B teams that will do well. Yeah, I don't think you'd necessarily need all the original creators of every new product.
Do you think this messes up their earnings? Like, is Zuck's gonna have to come on the call and say we've spent $1 billion on like 10 people?
I don't think people will be mad. As long as he casts that vision, and he really can. Like, he is a visionary. And one of those things that they've been building, he's been passionate about, is the metaverse. And the way the metaverse actually lives up to its potential. It needs both hardware and software. Hardware, it'll take time, but you know, they're getting there. But as far as software, like the dream science fiction version, which seems probable, honestly, at this point, like the Ready Player One type vision, is a fully immersive type of game or system. Now, there's a lot of societal challenges and stuff I'm not going to go into, but what you need for that is you need some sort of engine, an LLM that's able to create generative content that is adaptive. And so both graphics and LLMs are getting to that point. Llama is not up to the task, though, and also a compelling story. And again, more work needs to be done, but it doesn't feel impossible. If they do that, there's a massive first mover advantage. It's going to be hard, especially given the capital that they're putting out there and the talent as well, to pull something similar off. And so basically they're launching something that doesn't exist yet. Like Quest 3, yeah, it exists, but something like that is going to do very, very well for a lot of people who just want, at least for a little while in their life, to escape this present life and go into something else. We can argue whether that's good or bad, but it is bullish meta.
Yeah, I mean, it feels, dude, Apple already is so behind in this. Like, it's pretty obvious. And the fact that they lost someone today to Meta, I don't know, dude. I don't know what's happening with Apple.
I think if I was any of these employees, or even ones that, you know, decided not to take the offer or anything like this, I would go out on my own and see if I could raise capital myself. I mean, have some ownership in these businesses. If your peers are getting $100 million signing bonuses and a couple $100 million more in comp per year for a 5-year period, it's unbelievable.
Well, two of the OpenAI co-founders, Ilya and the Mira raised $2 billion with no product. Ilya raised at a $32 billion valuation, I think $1 billion with no product. So, like, if they were able to raise that much money with nothing other than like an idea, granted they are the originators of ChatGPT, so I get why VCs are excited to give them money.
Yeah,
you would think Meta has the and what does that mean for Nvidia? If Meta's willing to spend $100 million, like they'll buy as many GPUs. The GPUs is just like the first step. Like, now they need the talent, which just means it looks like there's an unlimited blank check ready for NVIDIA.
And honestly, I want to shake people sometimes. Like, open your freaking eyes. Meta is paying hundreds of millions of dollars for a few people worth of talent, worth the thousands that they also have to pay for. It's like, it's not like these guys are setting up teams like, oh, well, that's the price of the team. No, now it's time for those guys to tell them which, members that they want to add to their teams. The outlay of capital, I don't know what I'm saying. The amount that they're going to have to spend in CapEx for more GPUs, data centers, everything. I mean, like, NVIDIA is going one direction, ladies and gentlemen. And it's clear as day to me. But I don't know.
I just we're about to talk about Tesla in a second. I just want to personally thank you. If it was not for you, I would have picked Tesla as my Mag 7 this year at 370 or whatever. I had some puts on it at that time. Like, and if my year was defined by Tesla and Hood versus NVIDIA and Hood, it would be a very different year for me.
Yeah.
I got a lot of flack whenever I posted that video, but I feel very confident on the NVIDIA versus Tesla trade.
And that was such a good conversation too, just, working through and reasoning and listening to each other. And I think we all came to the same conclusion. You were the only one that actually was like full port. I sold some Tesla and bought more NVIDIA. But I didn't do it to your level nearly. So,
well, I thought NVIDIA thesis was bullshit. I thought all this AI shit was cyclical from a GPU perspective, and I thought the application layer was going to be the one that wins. And Tanner was the only one saying you don't get it yet. You really just don't get it yet. And then we had DeepSeek, and then I was like, all right, let's see if Tanner's, and he was obviously more than right. And now that Meta spending hundreds of millions for a person, like it means that the race for AGI is so unbelievable. Like, none of us fully understand how serious this is. Either it's going to be a flop, or it is going to be the greatest thing that humanity has ever seen, and all these companies are going to be fighting for it.
Yeah, that's the fun thing is like the metaverse, the oasis, whatever you want to call it. That's not even the most exciting thing that could come from this. So it'll be interesting. There's going to be challenges along the way. But the real reason why I got into NVIDIA was for that juicy dividend. So.
Yeah, baby.
Little 1 cent,
I'm a dividend investor.
Okay, I think our last topic is Tesla. Do you guys have anything else?
No, I think that's good. Those highlights.
All right, so Tesla's down 7%. Elon beefing with Trump again. He's starting a new third party, maybe. He hasn't filed for it yet officially, but he said he's starting it. Street thinks he's going to be distracted again. Is this a dip? Is the dip coming? Or do you think that investors should overlook this because at the end of the day, Elon will figure it out?
I think that we'll get a better dip before the end of the year, just a guess. And if we don't, that's fine. I have Tesla shares. I even bought one last week on this live, just as Tanner was bad mouthing Tesla. I'm like, I got to do it. But and that's down, of course. Over the short term, they have a massive demand lever that's pushed. Just because by September 30th, you have to take delivery of your new EV to qualify for that EV tax credit. And so there's a massive demand lever for people that have thought about getting a Tesla and for whatever reason have been putting it off. Now, we got ours, but there's a lot of people that are like, yeah, in the next year or two. And they're like, okay, if I save $7,500 now, yeah, I'm absolutely going to do that. So they'll have some good delivery numbers in the third quarter. But in the fourth quarter, I don't know. I think that there's going to be a lot more pain. And like the main thing is this is a stock that trades very much on a narrative. So robo-taxis have been a narrative that have propped it up, but that's going to take a little while. I would love to buy a dip in Tesla, but this is not the dip for me. I want to see it below 200.
I think the $7,500 federal tax credit is a benefit, and taking it away will suck. Once you add on the fact that Trump the America Party, which I actually think is, I think that the debt is a massive issue that continues to be, ignored because everyone in the political chain needs their little thing. They want their parks funded. They want all their little steps. They want other people to lose their funding. They want to keep theirs. And that chain is never ending and causes a massive $37 trillion dollar bubble here. That blows. I mean, that really does suck. To me, I would think that the most powerful you know, most wealthy country in the world has a debt to GDP that is below 100%. But that being said, yeah, I mean that sucks, doesn't it? Anyway, the thing that I worry about as well is that whenever you create a third party, is that you're not like taking on Democrats in terms of your enemies. You're taking on not just Republicans in terms of your enemies. You're taking on both.
Yeah.
And now that doesn't just mean a stage for politicians to dislike you. That turns media against you. That turns all the funding and where all that money is going to. The word about Tesla, any good piece about Tesla will never be amplified, and every negative piece about Tesla will be everywhere. And the people who do not want to look further at, you know, the products are absolutely phenomenal. Like, I don't know. I think it's just bad for business. Politics is bad for business, unless you're, you know, getting some regulatory lockdown on some industry, which is not what's happening here. It's quite the opposite. Just a scary place to be for even the companies with potentially the best products in the world in their space at a high premium. Like,
well, the one thing about Tesla that sucks is that every growth company is growing and they have an aggressive valuation outside of NVIDIA. Tesla's the one that has an aggressive valuation, but they're not growing at all. Nothing's growing. Not earnings, not free cash flow. They're barely going to do $1 billion in free cash flow. So it's like
energy and services. Yeah. But yeah,
it just doesn't contribute that much to the bottom line.
It is, and it will over time. But like, they have to sell vehicles, and like the tough thing is, like, people are like, but what about robotaxis? What about AI? What about robotics? It's great, but if Elon keeps doing this sort of thing, it limits that forward TAM, because there's a lot of people that will not get into Tesla, will not get into robotaxi owned by Tesla, and will never buy an Optimus bot, even if it's the best product out there, if they don't trust Elon. Like, why would you? If I didn't, like, if Meta came out with robotics, they're not working on this, but if they did, I don't trust Zuckerberg. I would never, like, even if it was free, I'd actually be really concerned if it was free, have that in my house, because I don't trust the man.
Yeah. Having said that, I'm still waiting for a dip to buy, because I'm not betting against Elon. So I'm waiting. I don't know if 290 is the right price, but
Tom Lee in that interview, guys, if you have not seen that interview that Amit has, it is probably the best interview he's ever done. You've done a lot of great ones, but that was just phenomenal. Tom always drops some massive nuggets. And there was, like, his comments on Ethereum, especially, and also Tesla, being the reason why it's valued where it's at. Like, he's just awesome. So watch that interview, guys. Do yourself a service.
Yeah, Tom Lee's argument was basically Tesla is a Da Vinci. It's a one-of-one, the company itself. And so you would pay a lot of money for a Da Vinci, a Mona Lisa, Pablo Picasso, because it's a one-of-one piece of art from those artists. And so if Elon is the brand, a one-of-one entrepreneur, you end up paying a pretty hefty premium. Real quick before we talk about SoFi, do you think Elon should be replaced as the CEO?
No.
Nope.
Why?
The stock would go down 80%.
I agree. I think people calling for it over the weekend are out of their damn minds, bro.
It's the same. I think it's the same stupid argument where people were, you know, doing the same thing with Alex Karp. I mean, they do it with any CEO where a stock is underperformed for a while. But to be fair, Elon has been distracted in a lot of ways, and he's done some things that have hurt the stock. But Tesla would not be where it's at without Elon, and it will not reach its potential without Elon. It may not live up to its potential anyway, but the only way it gets there is through Elon Musk.
There's a lot of companies doing a lot of interesting things. The reason why Tesla has its extreme premium versus NVIDIA, or mainly all these other companies, is that one man's vision.
Yep.
His ability to hire talent that is of the highest degree, the way that he gets them all to march at the same towards the same similar goal, gets them excited about it. I mean, it is Elon. You know, the company should be trading at a much lower valuation. The reason it isn't is Keyman, the CEO is, I mean, potentially, literally the best entrepreneur that's ever lived. He just also has such a great mind for solving problems that he wants to solve a lot of problems, and that can also get him distracted. But you still want to be a part of it. I mean, like, I don't know.
All right, last topic for the day. SoFi is being SoFly, up almost 40% year to date, 202% over the past year. Start off with you, Tanner. How does it feel? You're about to crack the 20s, and potentially start a brand new era for this stock.
Yeah, I mean, feels great. They are hopefully seeing some macro tailwinds that should continue to push the company higher, that should get analysts more excited. The short interest continues to be sky high, so hopefully that continues to we can continue to put pressure on them up into the earnings. I'd like to think that we get a triple beat and that the institutional investors will cower away, but it doesn't seem to be what happens on earnings day. We triple beat and then they sell. I don't understand it really, but overall, we are finding higher highs and higher lows. And just like Robinhood, just like all these other companies, I'm not worried about the price of today. I want a company that continues to gain market share in every product that they have and hold that for as long as that thesis stays the same. So happy shareholder. I think we do actually see $20 very soon here. The share price that I just bought in the overnight markets earlier today was $9.50. So hopefully we end up getting much closer to that. But yeah, and we have a ton of setups for short term to continue to pump higher. Website traffic looks like we're going to skyrocket on new members. Loan platform business is doing amazing. If we end up getting a rate cut, that's going to further every aspect of their company. Crypto's coming back. Payment transfers are already in app code today. And then what's maybe even more exciting or bearish, maybe we don't really know yet, is Scott Bessent's comments about tackling student loans.
So I got some comments on that. I have a video out too, and I didn't go quite deep enough. I wish I had added a couple more minutes, but that's really why.
Is your video already out?
Yeah, it's out.
Okay, so I'm gonna link the video.
It's my most recent one, other than this one. But the big beautiful bill, so called, when it passed, it did a lot for SoFi, and that's one of the reasons why the stock is moving up. So it's over through 2028, phasing out these student loan repayments based on income, and some of those were $0 repayments. He has taken off the table the idea of just loan forgiveness. They're not doing that. We already knew that they weren't doing that, so that's not a big deal. And then they capped the amount that is available for graduates and also for postgraduates, professional students that are, doctors, lawyers, that sort of thing. For the grads, it's $20,500 per year, $100,000 over a lifetime, which lifetime's probably okay. $20,500 is not a lot, especially if you are living on campus. They're going to need a private loan, and guess who does that? SoFi. Also,
I actually didn't even hear this.
$50,000 a year. What's that?
I said I didn't even hear that. That's insane.
And $50,000 a year for professional students. For doctors, in a year, that's not nearly enough at all. So those two demographics, graduate, and professional students that'll be future doctors and lawyers and engineers and those sort, they are the type of audience that SoFi does well with, and they already command a massive size in student loans. Plus, two of their largest competitors got out of the business. And the last thing that's so cool with what they're doing with the loan platform business, people could say, oh, well, yeah, there's going to be a lot of demand, but they're going to be capital constrained. They will churn that out as soon as there's an appetite for it and a lot of demand. And there will be through the loan platform business. And a lot of people will be buying through SoFi these loans that have zero risk to SoFi. Now, the one wild card is what Tanner said, what Bessent mentioned as far as tackling student loans next. But we can pretty much rule out they're not going to forgive because, they're not. He said that as much. Probably not going to do income-based repayment just because they're phasing those out. It doesn't make sense to phase those out. So I don't know what the solution is and what they're looking at doing. It's something that they need to do. And even if it's bearish SoFi, I hope they tackle it in a way that is going to kind of pop this college bubble, because it is not good for our nation. It's not good for people that are almost expected to go to college and accrue a home mortgage by the time they graduate with a degree that they can't even use. So I don't know what the solution is. He doesn't either. So that's a wild card. But if it's not bearish SoFi, whatever comes out, I don't think that it will be very bearish. It might even be very bullish. My $25 price target by the end of the year for SoFi might look absolutely bearish.
Yeah, I mean, I think when things go on a run, they can really go on a run. And whatever has been the reason that's been holding SoFi back, if that reason is broken through and retail gets excited and the street gets excited, I mean, $20 is not a lot of like actual money for people to spend on a share. It's not like $100, $150. So like you'll have people just throwing thousands and thousands of buy orders for shares and just hope to maybe it goes up to 23 and then from 23 to 24. And you get people hopping on and then it just kind of happens. And then if your intrinsic value for SoFi is anywhere near 35 and the argument is that it continues to be undervalued even with the run, it could change a lot of lives as SoFi gets momentum.
Yeah, definitely.
All right, cool. I think that is it for us. The results on this poll for Bitcoin, 52% of you said no, you would not sell a free Bitcoin.
Woo!
Huddle.
Huddle gang.
Here's my thing. If you think Bitcoin's going to 250 at the end of the cycle, I think you could use that 100K to make better than a double on a return. And then if Roy's right, there's a crypto winter and Bitcoin comes crashing down, like it's just like, but I get most people think they just want to hold forever, right? It'll be worth millions per coin and that probably will happen eventually, but I'm taking the money, bro. I'm taking the money.
Here's the thing. In the future, like what happened in Venezuela or whatever with the Venezuelan bolivar, you'd go around to your local shops and people wouldn't even accept the currency that they were selling it in, right? They didn't want that. Hey, give me US dollars, give me gold, whatever you have that's actually of real value. I'd rather take that than this Tinder. The US dollar, I mean, there are people that really do believe that their future house will be bought and sold in real, like something that has real value. Maybe that's Bitcoin. So you got to have at least one. I mean, that already puts you in the elite. Just have one. Enjoy it.
I think that argument though is dead with stablecoin. Like it just US dollar is going to be dominant for a long time, just because of the prevalence of stablecoin and what it's going to do for a lot of these, especially because the vast majority of holders of the treasuries and the stablecoin as well are international, and a lot of that's Web3 stuff. But as they shift and move towards real commerce, that's going to be increasingly differentiated. So I don't know. We're so blessed to be in the United States, other than Tanner, who's in the 51st state pending. It's just such a good setup. It feels like a cheat code, honestly. Being born in the United States in a time like this, not everything's perfect. There's plenty of problems. The debt is one of those. Student loans is another. But for every problem that we have, there's a lot of good stuff happening too. It's nice. But we don't get the stupid SpaceX and OpenAI tokens because EU gets that somehow. I don't know.
Since I said that US dollars will be used for firewood, my views have gone down. It was a joke, guys. All my money is in US assets right now. All of it.
The Canadian calling out the US dollar.
I've got way more US dollars than I do Canadian dollars. I'm betting on your guys' future. Let's chill.
So speaking of views, I think we should just acknowledge that, like, we usually don't do this, but there's about 1,500 people watching us, and it's been around that 1,200 to 1,500 for the past 4 or 5 weeks now. So, yeah, thank you guys for watching every Monday. I mean, this was just something we did for fun to start with Robinhood, and then kind of got sued, and we had to transition, but we get to talk about anything now, which is fun. Obviously, it's Robinhood first, and then we get to everything else. But yeah, it's been an awesome community. I think the core people that watch us every Monday actually give a shit about Robinhood. Like if you care about Robinhood, you're probably watching this on a Monday. And there's not a lot I mean, the SoFi community is still massively bigger than Robinhood. Same thing with Palantir, Tesla, Nvidia, et cetera. But, now the community is really starting to get formed, and it's super cool to see it happen.
It's crazy how it works. A company can go from 8 to 100, and then people just look at it, go, it passed me by. Or like they still don't get it. I mean, I don't know what has to happen to get people involved. But
that's been the really fun thing over this last week. So I and several others too, started talking about Webull is, I was seeing it as maybe a 2x over the next 12 to 18 months. So nothing crazy. I'm just like, hey, it's a good setup. And then they did something on Friday where I'm like, okay, this is stupid. And I still have my shares. I've sold all my vertical spreads, but it was really fun in the comments having people that don't follow me educate me and like, why are you not in Hood? Hood is a much better play. It's a much
like, hey, Roy, don't you know Robinhood's the real play here? And Roy's like, yes, I know.
I've heard of them before. They're all right, yeah. But no, it was just awesome because retail sentiment has changed so much that 2 years ago, you post anything or you mention anything on Robinhood, no one's interested. Everybody's like opportunity cost, dumb company, scam, sham, Vlad's, fake, whatever. And there's still people like that. There always will be. And that's fine if you're of the opinion of that. But man, what a time to be alive. And it's not, and I get the feeling a lot of it is price action. Because that's the way retail works, right? If Robinhood is trading at like $20, people would be a lot less excited, which is a shame because I'd be even more excited. I'd be loading up. But some of it also is just sheer execution. People see the velocity and the excellence with which they've executed, and doing it with that small of a staff, keeping that constant, keeping SPC, actually rolling back the numbers. It's just like, and then all the forward, like moonshot type projects, just, man.
You know what? There used to be a common saying with SoFi investors that would hate on Robinhood, and they'd always say, yeah, but the company is running on Galileo and these sort of things. Wait until the day that SoFi Invest is running on Robinhood chain. They have their own Galileo now. There's a really good chance that they could be the ones that have the underlying technology for brokerage, and that's a real possibility now.
Yeah, that's something we'll need to talk about on SoFi Weekly this Friday. But that was a good analogy that Robinhood has their own tech platform. Maybe. It's, and the great thing is, like, even if that doesn't work out, it's still a great company. So,
and I just want to say, we aren't even in the S&P 500 yet, and that part is what makes it really exciting, because this is not a meme stock that, like, when people say it's a meme stock, I'm like, you just completely missed the story and you're not paying attention. This has been execution week after week after week in terms of how they've been showing off to the market why they are so special. The market's rewarding them. What they announced with the crypto stuff truly changes the dynamics of everything going on, and they're not in the S&P 500 yet.
When is Williams-Sonoma going to move their entire business on chain again?
Well, Tanner showed the S&P 500 updated market caps, and Williams-Sonoma is not eligible anymore.
Yeah,
22.7.
If I'm not wrong, they're at, let's check right now, they're at 20.8. Now, they're probably not going to get kicked out, but still.
I heard from StockGoat or something that he said like 150 of the companies in the S&P 500 do not qualify.
He's right.
It's crazy.
Just on market cap, and there's some that have lost profitability too. So yeah, there's a surprising amount of chaff there. Now, not every company that's lost profitability or has a small market cap is a bad company. Like Enphase, I think, is a good one. It's just very cyclical and it's beaten down. It might still be the smallest market cap in the S&P 500. Probably will get booted out, but yeah, it's wild where they can't figure out how to get Robinhood. They can't figure out how to get AppLovin. They can't figure out how to get, like, even Snowflake. Like, come on, get these companies in there. But whatever.
Hopefully September, dude.
Yeah.
Hopefully September. Okay, last question real quick before we leave. When you guys go to order Alfredo pasta, what are the types of noodles that are in that pot? I'm just curious how you, like, can you describe what type of Alfredo pasta you like?
Alfredo noodles.
No, but there's another word that comes after Alfredo that starts with an F. No, that starts with an F.
Fettuccine?
Yeah, Roy, what is, do you like that pasta?
Yeah, fettuccine, yeah.
How do you say it? I think this is a pronunciation.
No, it's okay. It's okay.
Yeah, I guess Alfredo's a sauce, fettuccine's a noodle. What, do you like spaghetti instead?
No,
No, he just doesn't say fettuccine properly. How do you say it?
I thought for the past 10 years, and this morning the word of the day was some pasta word, so I mentioned fettuccine. And the whole freaking I'm ready to end the stream. The whole chat's like, is he troll? Is this like, what is that? And I'm like, what are you guys freaking out about? And then I went downstairs to my sister. I was like, how do you say Alfredo? She's like, oh, fettuccine. And I was like, it's freaking chini. I thought it was chuni for the past 15 years, bro. I thought it was fettuccine.
You've ordered that at restaurants? Can I get the fettuccine?
In my head, I think, oh, Alfredo fettuccine. Like that's how I've never said chini. I've never said that ever.
That's awesome, man. You have your own style, and you just have to admire it. Like, I mean,
no, it's not style. It's just being an idiot, bro. Like, it's like I thought it was fettuccine for the past 15 years. Like today was a major revelation.
But you're acting like it was one word. You come to us every week with a new word that you just pronounce a made-up pronunciation that no one else says.
What's your first language? Because it's not English, bro.
People don't see the world the way I see the world.
No,
what is
the
it?
great thing is, in a
Massachusetts?
couple years, you'll be big enough that you can create your own pronunciation, and you're big enough, so that's the way it is.
I thought it was
Massachusetts. How do you say it?
I'm not even saying that one.
I forgot about that one.
I can't say Massachusetts. I don't know how to say it. So
Byzantine, I think you got right, if I remember.
No, I thought it was Byzantine, but
Byzantine, yeah. It's close.
All right, that's it. Thank you, everybody. Everyone's Twitter, YouTube's in the descriptions. We will be back next Monday, and I'll see everybody tomorrow in the market open. Bye, everyone.
Bye, guys.